asset brings is 31 mil of annualized revenue and 10 mil of annualized EBITDA.
Welcome back to Proactive Investors, ladies and gentlemen. I'm your host, Kerry Stevenson. I've asked Kevin Chin to come back and join me. He's the executive chairman of VivoPower, listed on the NASDAQ under the ticker code of VIVO. Very easy, Vivo. Now, last time I spoke to Kevin, he was saying that there's lots of things going to happen. He talked about acquiring data centers, etc. Well, guess what, ladies and gentlemen? He's as good as his word, because we're going to talk to him today about the acquisition of the Norwegian data center, what that means for the company, what it costs, what's the deal, and why you need to sit up and take some notice. Kevin, great to see you. Thanks for coming back to Proactive today.
Thanks, Kerry. Pleasure to be back on. Good to see you too. Very happy. Team's very excited to have closed and completed this Norwegian data center acquisition. We flagged in late December that we had exclusivity to acquire it. So that's now done. And why it's so transformational for us as a company is threefold. So A, it returns us to EBITDA profitability. So what this asset brings is 31 mil of annualized revenue and 10 mil of annualized EBITDA. On a sort of pro forma combined basis, that's materially higher than what our burn rate is now as a business and as a group. So that's number one. Number two is it evidences our strategy and execution and commitment to the AI data center path that we've embarked on. And this is highly strategic because it's an operational asset that's been running for 5 years. And it has 41.5 megawatts operational today. It's all hydropower, sub 5 cents per kilowatt hour, so very, very strategic. And that sort of segues into my third point is we've already fielded inbound interest from AI neoclouds and operators. So that is a pathway to engage with, or this has created a pathway to engage seriously now with those players with a view to signing up sort of longer term leases, which, with other companies that have done the same based on market rates, that potentially, not a forecast, doubles or triples our EBITDA in time. So, yeah, exciting to get this done, and teams working hard already on that sort of next phase of execution.
I want to talk to you about next phase of execution, but before I do, can we take a step back and just talk about the terms of the deal? How did you secure it? You said before that, in late December you had exclusivity around it. I want to know, why did they choose you, and also why did they divest the original owners?
So the original owners I've known for a while. They're great operators, the Lian Group out of Switzerland. They own another site in Norway, which is bigger, 150 megawatts, and they're in partnership with HIG Capital. They have CoreWeave, they have Crusoe already as AI neocloud tenants, and they wanted to, I guess, continue to invest and contribute to the build and growth of that asset. And they felt that with this smaller one, that it might be better in our hands. And so total consideration wise, we've paid 41 mil, which is about 4 times EBITDA. And the Lian Group has taken 25% of that consideration in stock, as in Vivo stock, at a premium to our current market price at $4. So they're very aligned, with us in terms of wanting to see, this asset really grow and mature in terms of its or optimize rather in terms of its revenue and EBITDA potential, which is significantly higher in an AI context. And in time that should translate into a higher share price, and they would be beneficiaries as well.
Yeah, the share I said before, listed on the Nasdaq. Talk to us about the share price. Being under a little bit of pressure at the moment, but one thing that I just noted then was that the company's taken the people that you bought from, forgot the name, 25% in stock at $4 a share. That's a premium to the current share price, which means that they've got a lot of confidence in what's happening in the future. That's extraordinary.
Yeah, yeah. And, I think that sort of crux of it is that we're very focused on partnering with people who are long-term minded, like we are. And there's no better evidence of that than, subscribing at a premium because of conviction in A, the quality of the asset that we just transacted, B, in terms of, and there's many precedents in the market where uh, execution consistency will lead to, a higher share price, in time. So there's been a little bit of pressure. Today was a bit odd, but we're not alone. This is not uncommon in the sort of micro cap, small cap space. Idiosyncratic moves happen day to day. I think we're still up more than our peers, on a year to date basis. But importantly, what this acquisition definitively does as well is it obviates the need for us to raise capital, to fund working capital in essence. And that's what sort of gave us confidence to terminate our ATM facilities, a few weeks ago. We knew this was coming down the pipeline. And yeah, so there's long-term alignments with the vendors, and similarly on sort of other fronts, we're engineering for the same outcome. We don't want to dilute the stock. Uh, we've turned down capital from different players that wanted a sort of big discount. Uh, and yeah, we're confident in the strategy that as long as we keep executing, the share price will take care of itself.
All right. Well, let's wind it up and let me ask you this final question, Kevin, and that is, why should people sit up and take notice of VivoPower right now? Just give me three. There's probably about 10. Give me three.
I think there are three reasons, Kerry. So number one, we now definitively have a platform that's profitable, that gives us the ability to engage with AI hyperscalers and neocloud operators to maximize the revenue and EBITDA potential of the Norway site. Uh, that's number one. Number two is uh, I don't think the market understands fully what this means for us as a company and as a business. We're 10 million EBITDA. I believe market cap's 50 million. I think folks can do the sort of peer group analysis with regards to valuation metrics, enterprise value to megawatt, enterprise value to EBITDA, so on and so forth. Thirdly, this now puts us squarely into execution territory where we now have the ability to engage with all sorts of ecosystem players that are significantly larger from an institutional perspective. And that started already. That started already. And we needed this one to complete and close first, and we've done that now.
Well, you said you're going to do it. You've done it. You're executing. It's always good to see you, Kevin, and come back once the next deal, or even if not just before. But ladies and gentlemen, that is a very exciting development for VivoPower, listed on the Nasdaq. The code is VIVO. Always a pleasure to talk with you, Kevin. Thanks for joining me on Proactive today.
Thanks again, Kerry.